What's going on, traders? Sandra O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is December 16th, 2021. Please go ahead and be so kind as to hit the like button on this video and also subscribe to my channel. That way you don't miss any of my future videos. Today we're going to talk about the price action, the indices. And I must say, this is one of the most wild environments I have ever been a part of, for sure. You know, we're really watching history in the making here. This is pretty insane price action. So we're going to talk all about it. We're going to talk about my trades for the day. And we're really just going to put what we're seeing into context here. We'll just talk about what could be coming as we enter year end. So without further ado, box scores for today. S&P 500 finished down 0.88%. NASDAQ QQQ got absolutely sparked, down 2.57%. IWM small caps finished down 2.02%, and the Dow Jones finished down 0.1%. Volatility in 3 out of 4 of these indices increased over the session, but I will say that the volatility ended up closing much lower than where it peaked during the day. So we'll take a look at some of these volatility indices in more depth. And then what was really strange about today's action, and this is why I say like this is one of the craziest sequences we've ever seen, is because we had positive breadth in the SPY, but at one point the market action just looked like, oh my gosh, we're going to slip into the abyss here. So very interesting on that front. And we're going to see when we go to our heat map, just the rotation that happened under the hood. We did have negative breadth in the NASDAQ, only 32% advancers, negative breadth in the small caps as well, 30% advancers. Then we had positive breadth in the Dow Jones, 63% advancers. So very much a mixed bag today. And it's pretty rare to see SPY, leading the NASDAQ so much like we're seeing today. Finviz heat map, take a look at this. So I do think, we live in historic times. So we had this COVID crash. The Fed unleashed an unprecedented amount of stimulus. And with that, we had this rise of the retail trader. A lot of traders that started trading, full time, coming out of the woodwork, people that had never been involved in the stock market, and just started trading because we were really in this easy money environment for about a year. And then what I'm realizing is I start to look back on 2021 and really start to reflect on, the year that was. This really was like 2021 was the year that the 2020 bubble really popped, where a lot of these companies that were just like zooming higher, they've come off 40, 50, 60%. And I think in that sense, people are going to look back on this market. It's going to be very much like the same way that I hear some people look back on what it was like to trade the .com bubble. But that's like very high level thoughts. In terms of today's action, we had Microsoft down almost 3%. We had Apple down almost 4%. Amazon down 2.5%. Tesla is down 5%. And Tesla, I think, is going to go down as one of those iconic stocks. And it may end up going down as just a huge bubble as well. I'm not one of those like Tesla Q people that's like they're constantly calling for the demise of Elon Musk and whatever. But as I see this chart, it is starting to look like the top could really be in for Tesla. And then these semiconductor stocks, these have been very strong throughout the year. These all really buckled today. So let's take a look at some of these charts. Also noteworthy, other than the things that declined, we had a lot of strength in the market too. The financials were very strong today. Healthcare was also very strong. Pfizer, it turns out that, since we're basically in like a perma pandemic, it's basically going to be like a perma vaccine world. And with that, Pfizer is just a much more valuable company. Consumer defensive stocks did pretty well. Some industrials also. So just really a mixed bag. Now let's take a look. Before we go to our sectors, let's just assess, some of the action that we saw within these individual names. Let's see. So Nvidia, for instance, this is a stock that was just a stellar performer throughout 2021. Really nice run. Whoever caught this early, just great trade. But now what we're seeing is a lot of those late comers. And when you're in the heat of the moment, you don't really notice like, hey, this chart, was at this stock was at like 96 bucks, maybe like a year and a half ago. Hey, now it got all the way up to 350. That's a pretty big advance for a mega cap. But you get people that are like enthusiastically buying the stock, at 300, 320. Of course, hindsight, it's always 2020. You never know where a stock's going to top out. Yeah, this Nvidia, it just doesn't really look like there's much more power left in it. I mean, maybe we get some stabilization in this stock, but to me it looks like by and large we're seeing a lot of distribution in this stock, and I don't really think Nvidia is just going to be like, it's going to triple again in 2022, that's for sure. Tesla, let's also really just take a step back and assess this. So when we look at our options order flow every day, Tesla's always at the top of our list. It's just like this stock that it's just like an unwritten rule. Tesla's the stock everyone makes money in. Everyone trades options on it. Like, that's just been like a cornerstone of the market. And I think this really was the final straw. Now that Elon Musk started to sell off his position. Elon Musk is arguably the smartest guy in the world in many more ways than one. And I think in one of those ways was he really was able to captivate, the minds of investors. And really just everyone was like, we want to bet on this guy. Like, it just became this thing, like Elon Musk is the smartest. We have to bet on him. And in reality, like EV cars at this point, there's so many companies that are doing EV cars. So at this point, like, Tesla, the business, the car business, is it as revolutionary as it once was? Not really. Like, EVs are going to become a commodity in the future. So Elon Musk now, this is like his final act. He's selling off his position. So I believe it's not like he sold the whole stake in the company, but he's been actively selling the stock. And you can see, this stock, take a look at the weekly on this as well. This one, quite crazy actually. So this, if we go back to the beginning of 2020, which at this point is 2 years ago, pretty crazy to even think that, right? This stock was trading at around like $100, $150. And the stock hit a peak of 1243.49. So the stock almost went up like literally times 10 in 2 years. That's just incredible. So now Tesla, take a look at this action. It also just looks like a ton of distribution. And to be honest, like I scalped this one short maybe a couple of sessions ago. I think there could be a short trade in Tesla, to be honest, like all the way down to this gap fill. Like this one already happened. But really, to be honest, like we could go all the way back to about 800. Like this VPOC down here. I don't really see why we can't do that. So I think like all those Tesla people that were always salivating trying to short this thing when it was in an uptrend, they might actually get their day at some point in the near future. Some of these other semi stocks, I noticed the laggards in the semi space started really rallying, and I didn't participate in really any of these laggard semi stocks. It's typically like, okay, now we're just going to buy up all the laggard companies in the space. Didn't make all that much sense. AMD, also trading below value now. So yeah, a lot of fake outs within technology. Even Apple. Take a look at this. So Apple had an awesome run, and this stock went from, it's on a much more minor scale, but went from about $150 in the beginning of November all the way up to 180. So it's not really that crazy, but it is a 20% advance for, the world's largest company over the course of about a month. So yeah, we gave back almost 4% today. And I think this was really catalyzed by Adobe reporting poor earnings, and that happened in the morning. Who knows if that was really the catalyst? I think it definitely could have contributed, but yeah, Adobe down about 10% today. They missed, they basically were in line on their sales and earnings, but then their guidance for next quarter, they lowered their guidance. So yeah, take a look at Adobe. Yeah, Adobe's just kind of like, falling over as well. So we're really starting to see in a lot of different areas, just stocks that are kind of falling over. And we do have quad witching tomorrow. Could tomorrow be another wild day in the markets? Certainly could be. I am of the opinion that, even myself, like, my tonality in this video is like, guys, it's over. The bubble popped. But, like, to be honest, I do think that once this options expiration cycle is over, like right now, this is kind of like we've been in like a market crash sequence. Not for the headline indices, but for a lot of the growth stocks. Basically, they've crashed. Full on, market crash, essentially. I think that we're hitting the crescendo now. And I think after this options expiration, this quad witching, not to say like, oh yeah, now we're just going to rip back higher, but I think we're going to move on to the next chapter, sort of like the aftermath. And like, okay, now that everyone's gotten like obliterated, what happens next here? Let's take a look at our sectors and style factors. One stock that did do very well is Berkshire Hathaway. Take a look at this. And a lot of these financial stocks. So completely different picture. Look at this. Berkshire Hathaway is actually breaking out. And it's just very funny because in the world where we had all this stimulus, Warren Buffett, think about this. Warren Buffett was like ridiculed all throughout 2020 and 2021. Like, this guy doesn't have it anymore. He's not buying meme stocks, like whatever, like he's a joke. Dave Portnoy was saying he's like a better investor. And it's so funny that as it feels like we are exiting this period of like meme stocks and that, sort of era, it's funny that we have Berkshire Hathaway, his company, that's actually leading. So it's kind of like funny, almost like foreshadowing, like, some poetic justice that is taking place right now. Berkshire Hathaway is definitely on my watch list because it's a really nice breakout on this weekly chart. Let's take a look at our sectors and style factors. And you can see we did have some green sectors. We had consumer staples green, utilities green, healthcare green. These are all, once again, the areas of the market that you enter when you think Armageddon's about to come or a recession's coming. Other than that, the financials were actually the strongest other than gold miners today. But yeah, the ARK funds got absolutely sparked again, basically like a false bounce here. Chinese internets, the K-Web was down, cannabis was down, blockchain was down. So a lot of these very risk-on areas of the market really suffered. Even retail, XRT was down almost 3% today. So yeah, a lot of these software down 3.14%. Software is supposed to be the safe haven, but yeah, that one was down. And then the semiconductors down over 4%. Actually, I think the semiconductors one of the worst performers on the session. So the way this sell-off has progressed, it's really just been like rolling corrections. And today, those mega cap tech names really got hit. Style factors. High div, low vol was our best performing style factor. And then you can see international value was up 0.84%. Defenses were up 0.47%. Worst performers, we had growth down 2.23%. And we had momentum down 1.58%. High beta down 1.77%. So again, there's more risk on areas of the market really getting hit today. And let's take a look at our indices. So this has been, I must say, for a trend trader, this is the most difficult market environment that you can get. The reason why is because the market's not trending. Like if you look at the S&P 500, we've been in a very volatile tape, but it's really gone nowhere. So yeah, that's very tough for trend trading. Let's take a look. We have our key pivot levels we've been watching. Again, I'll just reiterate: 4,700, 4,600, and 4,500. And we can see today in the pre-market, we got a really nice move up to 47.43. And I must say, I was really of the mindset as of this pre-market that, hey, we had the big sell-off. Then we were able to battle back. Then all those people that bought in thinking we were going to break out, a lot of those players got shaken out. So I thought that, hey, we had the second shakeout. Now we're going to, go ahead and have our Santa Claus rally. But today, we've really got sparked below that 4,700 level. We undercut this 20-day moving average. We ended up closing above the 10-day EMA. While this may have seemed like, oh my gosh, this was such a wild day in the markets, what's crazy is that this was really just like an inside day. So when you have so much volatility to the upside and the downside, it really seems like, oh my gosh, the technical picture's changed so much. But in reality, we're in the same range we've been in for the past, 2 weeks. So it's really nothing different. What I will say though, this is a little subtle difference, is that today we made a higher high than we did prior, and we also made a higher low compared to even just yesterday. So like if, today feels just like so much more draining than yesterday felt. Like, oh my gosh, I can't believe we fell again. Think about it. We didn't even make a lower low compared to yesterday. So very interesting. The depending on like the composition of the rally, composition of the sell-off, it can feel like the index is moving so much when in reality this was just a little inside day. Let's take a look at the hourly chart. And you can see we pretty much made it all the way almost down to the bottom of this weekly value area. Could we end up tagging this bottom of the weekly value area? Certainly could. Take a look at this volume that came in and bought the dip in the final hour of the session. Pretty crazy stuff. So we'll have to see what happens into quad witching. Quad witching is a total wild card. So we'll have to see. And right now, the futures just opened up down 0.05%. NASDAQ undercut the 50-day moving average, and we're basically just sitting right on the edge here. The NASDAQ has really been respecting the 50-day, and it would be something totally different if tomorrow we just cascaded below it. That would not be a good look for the market. With this quad witching though tomorrow's really the day where we could have a quote-unquote like market accident. Who really knows though? I think for quad witching, just expect the unexpected, really. Russell 2000. You can see, we're awfully close to breaking out of a 10-month range here. It looked like we had double bottomed yesterday, but we got yet another fake out. And yeah, we're getting awfully close to the bottom of this range. So yeah, I don't want to be around in the small caps, if this thing breaks out of this range. And keep in mind, like the Fed really has not started tapering, raising rates, etc. And then the Dow Jones, basically our low beta index. The Dow Jones was just fine. Look at this, put in a doji candle. So yeah, depending on where you're trading, where you're invested, completely different, just vibes overall. And the Dow Jones, yeah, just no change really. Let's take a look at some of these growth stocks, that just continue to get hit. So Roku, this one actually closed up 7.39%. Yeah, they had a news announcement earlier that they were going to be doing like a 99-cent subscription. Not bad. But let's take a look at some of these other ones. So like the ARK fund, down another 3.79%, or 3.73%, excuse me. But keep in mind, we did not make a lower low. So that's the really interesting thing here. We have this ARK fund. I'm currently long some calls in CrowdStrike into year end. This one basically gave all the gains back from yesterday, but again, did not make a lower low. Roblox, and this will bring us to my trades for today. Let's take a look here. Okay, here we are. Let me just grab a snapshot of that. Okay, so one trade that I did try on the long side today was, my expectation was today was going to be a pretty quiet day. I thought really we were just going to chop around. And when I saw that, hey, even though the market's pulling back a little bit in the first 15 minutes, 30 minutes of the session, I was like, you know what, the breadth is very strong. So I think this is just going to be some digestion after Fed Wednesday, whatever, digesting the big move. And we ended up really falling. So I did try getting along some Roblox. Basically in the pre-market, I was like, you know what? I'm going to see if we get a pullback in Roblox to the 50-day moving average. I'm going to buy it off the 50-day. This is a name that I really like for the long term, but I ended up stopping out of it into the close. Because basically I said, hey, I'm going to buy it off the 50-day, but if we close below the 50-day, I'll know that I was incorrect. I'll stop out, and then I'll look for another entry point, on another day. So I closed out for 95.55. I'd paid 98.20. And let's take a look at this Roblox chart. So yeah, I bought it as we were coming into this 50-day, and I thought, we would just find support, maybe even close above the 20-day. And yeah, we just ended up cascading lower. So I was like, no big deal. I'll buy it on some strength. And the other trade that I did right here, I bought some SPY calls into year end at the 472 strike. And this one, I had a SPY position yesterday. I closed out 2/3 of it for a nice winner, left a little runner on. So I just wanted to re-up on that position. And then of course, the SPY ended up falling throughout the session. So we'll have to see how this trade goes. But for this one, sized very small, options trade. So I was like, yeah, I'm definitely going to ride this one out into year end, because I think even if tomorrow is like a horrible day, like, oh my gosh, like all these stocks get hit one more time, I have the feeling that at this point, everyone is just so like emotionally burnt out of investing and trading. Like, I really think people are throwing in the towel right now. Even though when you look at the technicals, a lot of these stocks, they're not making lower lows. They're making higher lows. So I just think for a lot of these investors, like, throwing in the towel on quad witching, I feel like would be almost like premature, because a lot of times when you're in a really volatile period, then once you get that options expiration, then things kind of clear up, maybe a bottom forms, whatever you want to call it. So yeah, if we get like one more volatile day tomorrow, that's okay. I'm just going to take that, and then we'll see what happens into Christmas. But this is starting to become like relentless. Like, next week is really like, we're going to be entering, Christmas week. Think about it. Like, the holiday season is usually super, super slow in the market. Usually there's not much volume. There's not much activity. Everyone's taking off. Like, it's just usually a very slow time. This year, like, the day after Thanksgiving, like, the market just got killed. And like, yeah, even into Christmas, with the good seasonality, market's been struggling. So yeah, I think, for a lot of these areas that are so beaten down, we're getting tax loss selling. People are trying to protect P&L. And I think it's really just like, get through the last 2 weeks of the year and just see what's on the other side, for sure. Let's take a look here at our VigTech options order flow. We'll also take a look at our squeeze metrics data, and we'll see what that dark index is looking like. So here we have, let's take a look at our options races. Today's combined flows. This video is just a little bit longer than usual, just because I felt like there was a lot to cover tonight. Well, we'll just make sure we won't look at this options order flow for too long. Wow, so there was more SPY flow and there was Tesla flow. Geez, I haven't seen that in forever. SPY does go ex-div tomorrow, trades without the dividend. It is quad witching, so maybe there's a lot of activity due to that, but that is definitely, that really stands out. Every other day, if you've been watching these videos with me, every day it's pretty much Tesla leading the pack. So very interesting. And we got Google, we got Adobe, basically the usual suspects on this list. Let's check out our flow. A lot of call flow going up for SPX. This was the other strange thing. Even though the market was selling off, I didn't see so much put flow, which was different today compared to other days. Qs, very mixed bag. Let's see, we got SPY. Let's see. Oh my gosh, all SPY calls. Yeah, I saw this throughout the day, just like so many SPY calls coming down. So could this be related to quad witching, ex-dividend for SPY? Could certainly be the case. It's tough to get too much signal from that on a day like today. Facebook, mixed bag. IWM, some big puts going up. AbbVie, Expedia, AMD, some calls going up. Expedia, a big call, and a smaller put. All right, let's take a look at our squeeze metrics, dealer gamma. Super interested to see how this came in. Oh my gosh. Team, this is insane. Look at this. The Dix came in at 47.2. That is nuts. So I'm of the opinion, let it be known, I'm on the record for this. I really think, we've done the data science work on this. When this DIX is elevated, that means smart money is buying the dip. So I honestly don't know what is going on under the surface, but to me it really seems like there are investment managers that are so on their back foot. They are so on their back foot. Like, I don't think, like, this sell-off today seemed very odd. It just seems like we're in a constant, like, volatility event. And I'll reiterate, for instance, like, I put on DigitalOcean today. Or I put it on into the close yesterday. I really like this company for the long term. Again, I've said this a bunch of times. Got long this stock in the upper 40s. Closed it out at 115 earlier in the year. And now I'm back, baby, at like $78. DigitalOcean, day after I put it on, was down almost 10%. And I am just of this opinion. I really don't think many people are like, DigitalOcean isn't worth 78. It's only worth 71. I really think there's some institutions out there that they're like, oh my gosh, like, we just got so sparked. We just have to sell our entire book off. And like, oh my God, we're getting liquidated. This is awful. I think it's more so of that going on, which is another reason why I think it's so important to just let this OPEX pass. Because I think a lot of those dead bodies are going to be removed from the market come tomorrow. But yeah, this is, and then under this backdrop of stocks just getting like sold off left and right indiscriminately, like, oh my gosh, just get me out. I've even seen like the pace of the action and the tape is just incredible. I honestly think that when you combine that with what we're seeing with this dealer gamma, to me, the dynamic that I'm seeing is there's some weak hands that are literally getting carried off in stretchers into year end. And trust me, we're going to find out, all those dead bodies, they're going to come to the surface. But I do believe that there's like this invisible hand of smart money that is accumulating these shares at this point in time that these players are having to offload, that they're puking up. So yeah, 47.2, that is a very elevated reading that back tests very well for some nice future returns. I'm actually going to run those back tests. I'll share them with Pristine Capital members. Yeah, that's a great way to go off from this video. That's at least a nice high note to end off on. So with that being said, thank you everyone that's watching these videos. Thank you for everyone that's in the Pristine Capital trading community. Hope you all have an awesome evening, and I'll see you all tomorrow.